What does the stock market hitting record highs mean to you? Jedediah Collins here with the Money Vehicle Movement podcast, where we're trying to make financial literacy a little more current and possibly even a little cooler. Recently, the United States stock market hit record highs, which means that many investments are valued higher than ever before in history. Think about that. People have been investing for a long time, and this is the highest prices and values the market has ever seen. Well, not each individual stock, of course, but on a broad average, the market is up. Wait a minute. Did he just say average? Money vehicle investment philosophy B average use an index means you are betting on the field, you are betting on all companies, and you are benefiting from this record highs. So, odds are, if you have investments in the stock market, your portfolio is looking pretty good right now, you genius, you. The stock market has been hovering around all time highs almost all year long. But what really set things off recently was the Federal Reserve's decision last week to cut interest rates. As we've discussed before, the Fed, we typically call the Federal Reserve, cut interest rates, which effectively makes it cheaper to borrow money. Have questions on this? Check out one of our earlier posts. When borrowing is cheaper, more people and businesses are going to borrow money. And when they borrow money, they usually have a reason. That reason is to spend it. People do not borrow money to save it up for an emergency, they borrow it to spend it. And spending money as a business helps the economy. It creates demand for goods and services and can lead to even more jobs, which, in a nutshell, is why the Fed cut interest rates to give the economy a little juice and create jobs. Now, the stock market increased to all-time highs because investors saw this interest rate cut as good for business. They believe that in the short term, businesses should see a spike in sales. And if you believe people will buy more from companies, then you should buy stock in those companies. This again takes us to a macroeconomic impact on how prices are set because when investors buy more, demand increases. And when demand increases, you know what happens next. Well, maybe you don't know what happens to supply. If you don't, supply and demand are inversely related. So when one goes up, the other goes down. In this case, demand is increasing and supply is decreasing. When there are fewer stocks available, supply down, they're worth more, leading to an increase in prices. And voila, the increase in demand and decrease in supply has led to the market price increasing. Now, this doesn't mean you should run out necessarily and buy as many stocks as you can, or even that you should open up a brokerage account and jump in right away. It all depends on your plan and your timing. Things change in the markets and they change fast. In fact, by the time you see or hear this, the market may have already receded from these all time highs. It's going to go up and down all the time. The market is a roller coaster. But what you should do is use your money buckets to begin to save your money early in your financial plan. And as your plan begins to develop, begin to invest. Putting your money to work through investing will allow you to take advantage of the eighth wonder of the world, compound interest, but it will also allow you to take part in the market's natural tendency to go up over time. Remember, there are no guarantees when you invest your money or buy a stock. But if you look over an investor time horizon, the long term view, the stock market tends to go up over time because people are not going to stop buying things. The takeaway is that the best day for you to start investing is today. Then you can sit back and ride the roller coaster of the market over time with the odds in your favor that it's going to go up down the road. And the hope that your money working for you in the market years from now will be much more than you started with. How much more depends on your rich goals, your risk, and really how you define financial freedom or enough. Show people you speak money by implementing this saying into your financial plan. It's about the time in the market, not timing the market. Record highs may say, ooh, I don't want to buy at the high, but time in, get in today, ride the wave all the way through tomorrow and into the future. Keep driving your money vehicle, and we'll see you at the next stop.